Tariff war has reached its height, where Donald Trump has slapped taxes on China worth about $200 billion of Chinese goods. Beijing has vowed and hit back, but faces another round of tariff if it retaliates. The US president announced the tariff in the statement, saying that if China takes retaliatory action against our farmers or industry, we will immediately pursue phase 3, which is tariff of approximately $267 billion on additional import. The tariff will start at 10% beginning Monday of next week and then rise to 25% on Jan. The US president blamed unfair policies and practices for this escalation. Let's get some global perspective on this. Peter Cardillo, Chief Market Economist, is now joining us from Spartan Capital Securities. Peter, what's your first take on this new tariff that has come in?
Well, there's no doubt that this expands the trade war, and obviously, you know, President Trump has been very clear on the fact that he is in no rush until he gets a deal. So he's going to continue to put the pressure on China. The question is now, will China retaliate? Obviously, they said they would. And, of course, that means, you know, some real short-term pain. And that short-term pain probably means stocks are going to work their way lower as this trade war continues to expand. Obviously, 10% beginning next week and then 25% beginning of next year. So it's a pretty hefty imposition of tariffs, and as I said, it looks as though both sides are not going to cave in anytime soon.
Right. You know, what is the sense that you get how markets will react to this? You know, till now there was only noise. What's coming? Is there a second round coming? Not coming? How things are? But the one that has come in yesterday is pretty clear. It starts next week. It escalates going on from here on. And if China would retaliate, then this would only get worsened. So do you think markets will now start to react to these news flows?
Oh, I think so. Yeah, I don't think we're looking at any major downward movement right now, but I do think that we're going to continue to stay in a very defensive mood. Looking at the futures, they're indicated lower opening for us in the morning, and that means you know, we could see the markets lose maybe 1.5%. A lot depends, of course, what the global markets do, but there is another factor here, and that factor is that we're beginning to see the dollar now come under pressure. That obviously is both a negative and a plus. By that I mean that we can see commodity prices respond to the positive side, while equity prices in the intermediate future to the downside. And so that's going to be another factor, in spite of the fact that we have raising yields for the second day in a row. We have the 10-year trade above 3%. I don't think that this is going to derail the Fed this year. They will continue to raise rates at least 2 more times, but there's a possibility that if the trade war does extend itself and there's no indications of some sort of a mutual agreement, a deal by the part of China and the United States, then I think there's a possibility that the Fed may have to reverse course in the beginning of the new year. But again, that's all predicated on the fact that it would have to get a lot worse than what it is now.
Right. In terms of emerging markets, what is the sense that you get? Do you expect emerging markets will fall more than the domestic markets? This time around, the trend has not been followed. The developed markets have done very well. Emerging markets overall have not done pretty well.
Yeah, I think that'll probably continue. And, you know, I mean, the hottest market remains here in the States. But again, a lot depends on what China does. And they've given all indications that they're going to retaliate. And so if they do, that just means that the trade war escalates, and that means more pain for the global markets. And I think, you know, the United States is going to participate, not necessarily under the weight that we've seen in the emerging markets, but certainly a very much more defensive market ahead.
Right, but do you think markets have fully now factored in, you know, the sort of liquidity issues, if any, if Fed were to hike pretty fast, or that is a still big global event that can tamper world markets?
I don't think they factored in the full effect. No, not yet, and that certainly would be a big market global event.
Thank you so much for taking out time for us. Always good to get perspective from you. Cheryl, that was a global voice saying that markets will react to this news flow, which is now coming in at this point of time.